the metals.
Well, on the back of a $30 million share placement and a rise in base metal prices throughout 2016, Red River Resources will soon recommence production at its Thalanga zinc mine in northern Queensland. The miner will be the only pure zinc producer on the ASX in 2017. Not a bad position to be in, given zinc's price has doubled from January this year. Well, for more on its future plans, we're joined live in Melbourne by Red River Chairman Fletcher. Brett, thank you so much for joining us. Really do appreciate your time. Now, tell us a little bit more about this project, this development of Thalanga in northern Queensland. Production has been suspended, still is, until recently when you raised that $30 million. Tell us a little bit about the company and the background on this project.
Okay, thanks very much. A great pleasure to be here. Look, Red River Resources has taken control of the Thalanga asset in around about 2014. And I guess over the last couple of years, we've been very focused on trying to put together a solid restart plan for the site. The site at the moment is fully permitted. It's got great infrastructure. It's got a fully functioning concentrator. And the mine closed in 2012 when Kagara went into administration. Since that time, we've been working hard to, I guess, get a better understanding of the mineral resources that are there. We've been heavily engaged in resource definition drilling. We've done a lot of exploration work. And about 18 months ago, we put together a pretty comprehensive restart plan. And I guess we've been waiting for the right market conditions for us to seek the funds to restart the project.
Now, once that does come into effect again, that production, which you're expecting to start back in, the second half of 2017, tell us about the sort of cash flows you're expecting to deliver and how might that sort of flow back to shareholders?
Well, at this stage we're looking at a start-up in around about 6 months' time, and that's, that should line up. I guess from a cash flow perspective, we've currently got enough ore reserves to last us 5.25 years, so we've got a fairly strong basis to start. I mean, I guess our general plan has been to try to generate enough cash flow after having raised the $30 million such that we don't need any further funds and that we're able to sustain the operation and the exploration program going forward. We'd hope to pay off our capital injection over the next couple of years, and then we'll look to utilise the funds that we're generating after that to either put back into the asset if that's appropriate, or depending on the circumstances, return some of that to our shareholders.
Now, what headwinds, if any, are you expecting to face as we do head into the new year? I mean, competition doesn't look to be much of an issue. We heard there Red River will be the only pure zinc producer on the ASX. But are you expecting challenges ahead?
Look, I think all mining operations have their challenges. I guess the great luck that we have is that we've got an operation that's fundamentally extraordinarily de-risked already. I mean, we already have a plant that we know can produce twice the production that we're currently seeking to put through the plant. We have all of our permits in place. We're well progressed with arrangements in relation to offtake agreements, and also we're also very close to signing up a deal with a mining contractor as well. So while there are always challenges with any mining operation, we believe ours is well progressed in de-risking all of those factors, and we would be very, very confident of a start-up on time, on schedule and on budget.
All right, excellent. And of course, a rise in those base metal prices has really provided that impetus to restart production. Zinc, one of the standout performers in the metals complex across 2016. Do you expect that momentum to continue for the commodity?
Oh yes, most definitely. I mean, I think we've been watching the market very closely. A number of us have worked in the zinc industry for a number of years, and I think all of the signs are looking extremely positive. There's been, significant drop in LME levels on zinc. We've seen, as you said before, we've seen the price of zinc increase nearly 100% in the last 12 months, and we know that there are fundamental changes in the supply side in the zinc industry as well, with a number of mines closing down. So we think this is the perfect opportunity for us to restart production. And on that basis, we've been well supported by our shareholders in raising the money so that we can get underway.
All right, fantastic. Brett, we might wrap things up there, but it's been wonderful having you on the program. Thank you so much for joining us.
Thank you very much.